Welcome to Dr. Fred Markets. This is not financial advice. Every day, billions of dollars move across markets that most people don't even know exist. Crypto, stocks, AI, the signals are there if you know where to look. And that's exactly what we do here. Let's dive in.
Nuclear meltdowns are safer than your favorite crypto miner. Verdict first. The future of cheap Bitcoin coin is welded to uranium, not solar marketing decks or ESG virtue. Signal 1. Today, Bitcoin trades around $76,291, down about 1.5%, and nobody notices the real story. Not the price, but the power bill. A single Bitcoin on average eats roughly 1,000 to 1,500 kilowatt hours of electricity to mine. That's like running a high-end gaming PC non-stop for months just to spit out one coin. Miners live and die on electricity costs. Pay 10 cents per kilowatt hours and your margin gets choked. Pay 2 to 3 cents and you print money while everyone else cries on X. Now look at nuclear economics, not the apocalyptic Netflix version. Existing nuclear plants often generate power at 2-3 cents per kilowatt hour once built, with outrageously stable output. No sun tantrums, no wind mood swings. They run 90% plus of the time, year after year, like a miserably reliable robot. That's the dream fuel for any miner stuck in a global knife fight over the cheapest watt. Signal 2. Buried in today's headlines is a warning label on that dream. A drone strike triggered a fire at a UAE nuclear plant, a live stress test of the safe, stable, boring narrative. Markets shrugged for now, but the risk is obvious. Every time nuclear looks scary, politicians slam brakes, permits slow, and regulators crawl out of the sea like Kaiju with paperwork. That delays new capacity, constrains cheap power, and keeps miners begging at the feet of natural gas and coal. At the same time, uranium and nuclear names like NextGen Energy, ticker NXE, trade around 10.95, down about 2.5% today. The uranium story is in a classic early innings phase. Tons of talk, not enough concrete poured. But here's the uncomfortable math. If even a fraction of planned reactors, small modular reactors, and life extensions actually hit the grid, the world gets a tsunami of baseload power exactly where miners love to squat. Remote, underpopulated, politically hungry for investment regions. Signal 3. Miners are already whispering this with their feet. After China's ban, hash rate migrated to the US, Kazakhstan, and other cheap power hubs almost overnight. Whenever a new dam, gas field, or subsidized grid appeared, shipping containers full of ASICs magically sprouted next to it like financial mushrooms. Bitcoin's hash rate does not care about ideology. It sprints toward the lowest cent per kilowatt hour on Earth. Now imagine the same game with nuclear. Aging reactors in Europe and the US, begging for new revenue streams. Governments under pressure to keep plants open but not raise taxes. Private operators staring at a 40-year-old facility that throws off power day and night. You think they ignore a customer who pays in cash or Bitcoin, signs long-term contracts, and eats excess load at the edges of the grid? That's not a question. They don't.
Does what you just heard make you want to learn more, to dig deeper, to ask better questions? That curiosity is exactly what separates people who understand finance from those who don't. Most people stop at the surface. You're going further. Let's continue.
Here's your cliffhanger. Who wins the next halving cycle? The green miners flexing solar panels on Instagram, or the quiet freaks signing deals with unsexy nuclear plants in the middle of nowhere? Time to connect the dots. Bitcoin's long-term survival depends on relentlessly cheaper, more reliable power. Nuclear is the only existing technology that gives miners 24/7 baseload at industrial scale, with low marginal cost and zero carbon guilt. The drone strike headline isn't a reason to panic. It's a preview of the political volatility discount that lets early movers grab nuclear-linked power deals before the crowd notices. This is the ultimate miner moat. Mechanism is simple. When nuclear capacity expands or gets life extended, you create pockets of surplus or ultra-stable electricity. Miners, always on the edge of profitability, anchor to that surplus, offering predictable demand and extra revenue to plant owners. The plants keep the grid stable and funded. Miners lock in dirt-cheap energy. Everyone upstream of that relationship cries that Bitcoin wastes power while literally financing clean baseload. So what does this mean for you, sitting there staring at charts? First, stop treating Bitcoin as only a number on your phone. Treat it as a machine that converts the world's weirdest, most stranded energy into a monetary network. The question isn't, is Bitcoin up or down today? It's who feeds this monster the cheapest watts over the next decade. Second, your one new fact today. The nuclear Bitcoin marriage is not theoretical. Existing reactors already negotiate with data centers and heavy industry for off-peak load. Miners are just the loudest, most portable version of that customer. As small modular reactors roll out and old plants beg for new economics, mining becomes their side hustle, not their enemy. Third, action. This is not financial advice, but here is the truth. 1. When you research mining stocks, don't stop at hash rate and halving. Track their power source. Anyone tying themselves to nuclear or long-term contracts near nuclear-heavy grids sits higher on the food chain than the solar cosplay crowd. 2. Watch nuclear project approvals, life extensions, and SMR pilots like you watch ETF filings. Every time a government blinks and keeps a plan alive or greenlights a new one, ask, who will eat that extra power at 3 a.m.? Miners are usually first in line. 3. If you're a long-term Bitcoin believer, your hidden macro bet is energy policy. You don't need to trade uranium tickers, but you do need to understand this. Whoever unlocks cheap, steady nuclear power doesn't just light cities. They mint the cleanest, most unkillable Bitcoin on the planet. You're not just betting on a coin. You're betting on which reactor keeps humming when everyone else is in the dark. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.